up, everybody? It's Thursday, October 29th. So a lot of stuff happened today that I got to talk about. First of all, we had a little bit of a bounce back in the market, but I'm not sure if that's going to hold, and I'll get into that in a second. Earnings keep coming in very strong. We had after the close, we had Google, we had Amazon, we had Apple, and we had Facebook. The big four of the tech sector, and they all beat. In fact, they all crushed forecasts. They were very, very strong. The reaction was mixed, particularly with Apple, which is down after hours. But they had good numbers. But, you know, that's kind of the market environment we're in right now. I think investors, the initial reaction, they weren't so excited about iPhone sales. We'll see what happens. But anyway, it's down as I speak right now. All right. So we had a bounce back in the market. Fiscal flows up 90 billion over same time last year. That's government spending. And of course, I don't think I need to repeat this, but I will anyway. Last year, which just concluded the fiscal year, September 30th, 7 trillion total spending. That was up 2 trillion over the prior year. And now it's already up 90 billion over same time last year. So very strong. But here's the part that is kind of like a red flag or a yellow flag, a caution flag. This is the second day in a row now that I saw corporation income tax flows slowing down relative to last year. Now, they're still up. Those tax flows are still up over last year, but it looks like they just rolled over, and this could be the first sign that we are seeing, you know, the impact of the COVID spikes in turn on sales and profits. All right, so I got to keep an eye on that, and that would be a negative development, and it kind of suggests selling this rally that happened today. We'll see what happens tomorrow in the market. Also, what else? Individual income tax flows, which also have been trending higher. They turned a little bit lower year over year, just a little bit. Nothing, you know, that would indicate a trend, a negative trend. But, you know, if corporation income tax flows are rolling over, you're definitely going to see eventually individual income tax rolling over as well. Like I said in the last couple of videos, I was looking for lower weekly unemployment claims today in today's number, and that's what we got, 751,000. You know, claims are still high, but they've been down in the last 2 weeks, and they're down below 800,000, and they're trending lower. You know, I said that was indicated in employment and withholding tax flow trends. They were improving. So that was somewhat of a positive sign. So, of course, injected into all this continues to be the COVID situation, the worries over the election, which I can't wait. That's going to be incredible. It's going to be crazy. It's going to be wild. I'm looking forward to that. And the market still, to me, is somewhat on the defensive. Now, another thing that happened today, we had the ECB meeting, and of course, what did Christine Lagarde say? In December, they're going to do more stimulus. Now again, this is deflationary policy. You know, when they start buying assets or increasing the quantity of assets that they purchase, maybe she's going to go back to negative rates again. This is like a tax. It is an income drain. And you saw immediately the reaction in gold, which was down to levels, you know, pretty important support levels here, 1850 to 1860. The euro got hit, which of course that's a zombie move, because that policy, asset purchases and, you know, lower interest rates or negative interest rates, that's a drain of euro. You know, right? I mean, they're just taking away euro income. So ultimately, long term, it's bullish for the euro, but the zombies they see that it's like, oh, stimulus, we got to sell. So they sell. So the euro came under pressure, and I suspect that is going to continue for a while with the prospect of the ECB, doing their stimulus in December. Now, again, when I saw this, I'm just like, oh man, here they go again. I mean, it's central bank institutional think. I mean, they just don't get off it. We've been seeing this now for how many years? I mean, you look at the Bank of Japan with the negative rates, and they're like, whoa, we can't stoke inflation. Well, no shit. You got negative interest rates. It's like a tax. You're dragging money out of the economy. You're lowering prices to the point of being, deflationary. And they just keep doing the same thing. This is Einstein's definition of insanity. You just keep doing the same thing and expecting a different result. So, that's what we have to look forward to. Next week, we have the Australian Central Bank is meeting, and they're going to cut interest rates too. That's already starting to get priced in. So you're having, again, a restart of this deflationary monetary policy. It's not good. It is not good. Now, Fiscal was holding everything up, but you have these two opposing forces. You have the Fiscal, which is supportive. It's somewhat inflationary if it were left alone. But on the other hand, you have monetary policy of these central banks, which is highly, highly deflationary. So like it's squashing any of the inflationary or growth effect, not all of it, but it's squashing, some of the growth effect from the Fiscal. So, we're starting to need more fiscal now if these central banks are going to restart these policies, which it looks like that's what's going to happen. Anyway, there's more in my report. I'll be sending out emails. Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. Get in the know. You got to get in the know, folks. All right, see you tomorrow. Bye-bye.